I want to go to Danielle Hale on this because so much I want to discuss with Danielle. She's the Realtor.com chief economist. But Danielle, if you'll indulge me on this political question, I do wonder, the markets are beginning to pay a lot more attention to what could be, a jump ball election. I don't know if that's even accurate, but I wonder what that means for the real estate industry, especially when you hear all these reports that folks are holding off even looking for a home until this whole election is resolved. I don't know how many are doing that, but a good many are talking about doing that. What do you think of it?
I do think that the election tends to be more talk than action when it comes to homebuyer decisions. So we have seen sales slow recently, but I don't think that's the election. I think that's actually the macroeconomic conditions, the fact that mortgage rates remain relatively high and are expected to decline. So I think we see a lot of people sort of holding off on moving now, waiting for better conditions this fall when the Fed begins to cut interest rates, which should translate into lower mortgage rates. So we don't see that in the data. Generally, home sales is sort of independent of that broader political uncertainty, but macroeconomic uncertainty does play a role.
I had a chance yesterday to talk to the Redfin CEO, Glenn Kelman, and he was stepping back from this, the numbers notwithstanding, and describing a lot of what's going on in housing now is psychological. I want you to respond to this. This is from Glenn.
Oh, housing is in just a funk. Even though interest rates have dropped 20 to 30 basis points over the past few weeks, we've seen home buyers still on the sidelines. I think some of it is that home prices just keep rising. So up 4% year on year, even as the housing market has been somewhat slow. The real issue might just be the election. We've talked to so many home buyers who say they're going to wait to see what happens in this election. It is gripping the national psyche.
All right, you might have been more fine-tuned about it, Danielle, say interest rates really will decide this one way or the other. But he is looking at this psychological impact, for example, of homeowners who are not willing to put their homes up for sale. They have very low rate mortgages, and they know it's going to be a lot more expensive to find a new home. And others just are not in the mood to do that if prices slip. So where are we on this real quickly?
Yeah, I think it's more the psychology of low mortgage rates holding people back right now. So sellers right now are looking at the numbers and they just don't pencil out to make a move. It's very expensive because prices are higher, but also they would have to give up a low mortgage rate. And so that mortgage rate lock phenomenon is keeping some on the sidelines. We are seeing that time is going to improve that. So as we get further into the cycle, more homeowners pay down that outstanding mortgage balance. We see more sellers jump into the housing market, and we are seeing the number of sellers tick up very slowly. But I think that's going to eventually help heal the housing market. It's going to give buyers more options and help alleviate some of the price pressure that we've seen.
Thank you, Danielle, very much.